This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. As you know, I'm bullish the dollar. Next few weeks, I think it's rising into the FOMC meeting, Bank of Japan, and then let's see what it does then. But this is also a Kevin Warsh special, right? So if you recall, back in January, I made a bet basically on the 16th that Warsh would be nominated for Fed chair. He was on the, I don't know what it was, 31st or 30th or something like that. Anyway, we had a bottom of the dollar. That was also a big kind of scooping pattern that was getting formed. And the dollar has been rising. Yes, it's had some shake and bake, but held some major support levels like the 98. And then most importantly, it needed to get and stay above this kind of 100 level. It came back and tested, but it's still, to me anyway, percolating higher. So Warsh has FOMC at the end of the month. Rate hike odds are low, but not zero. And I think he'll have a credibility one and done, and that's it. And then we'll see what happens toward end of year. But for right now, I don't think he's going to do it in September because that's right before Jackson Hole and midterms. And I don't think he also wants to tempt fate with the BLS revisions that typically come out in September. Sometimes they can be big. But the point is, I don't think there'll be more than one. And we might get it. We might get it in July. Anyway, the dollar is pushing higher into that end of month. Also Bank of Japan. But for right now, more likely we get this continued inflation read on energy prices and agriculture and the rest, Iran risk escalation. But the lagging effect of housing has helped delay or soften the CPI prints. Tariffs are now front and center, which is inflationary. War is front and center. That's inflationary. In the meantime, tariffs haven't been very successful. However, they are now a 7% average, which is much more than they were before Trump took office. So there is still tariffs that are to be discussed. But as the dollar has basically moved higher, we do have a reflexive, or I should say, technical bounce in gold and silver. We'll take a look at that. Yields have also moved higher into that kind of 4.6 area. I think this is what we look at for a bigger warning, 4.8% on the 10-year yield. Then I think the economy, cost of financing will start to repulse. But until then, 4.8, we're not there yet. Oil, as I made the assumption that memorandum of understanding here created a gap down, we'd go into the pre-Iran war lows. Remember, there was a gap up on February 28th. And now we filled that gap in the 67.5 area for crude. And we have been beautifully scooping on this 2-hour chart, literally just really strong. And I said, so now the real test is we have to gap above 85. And we're there. So I didn't actually put that 85. So sorry. There we go. All right. So this is the gap fill on the way down right here. Sorry about that. And this is a little bit deceiving. So I'm going to change that color because it's not what I wanted. There we go. All right, so we need to stay above 83 and change, but the point was we needed to get and stay above 85, which was right here, the gap down. Okay, so now we're above 85. In fact, crude just pierced 88 into nearly 89. This is WTIC. And we're having a little reflexive profit taking there. But the point is it's still moving higher and I still have 91. So bigger picture, this is a big scoop pattern on a 2-hour just to show you. Mike was very smart when it came down here and filled the pre-Iran gap fills. He got some lotto longs in futures and those are printing. And he announced that loudly and often. So that is absolutely brilliant. Most people will see this channel right here as, or at least technicals anyway, as your channel of chop. So we can still rise up into 91, pull back into 83. It's a big area, but this is where we're ultimately going to kind of need to stay above in order to take a slingshot and get above 91. So for right now, 91 was my top. Remember I said 85 for sure. That's easy to see, but then an overshoot to 91, and then let's see. If it gets and stays above 91, we have big troubles. This is a big headwind. Globally, supply constraints are one thing for the AI memory bottleneck trades, but honestly, it's Arab Spring 2.0 as it relates to the Strait of Hormuz and Bob, the other strait being closed, and security for all types of food stuff, fertilizer stuff, oil and gas stuff. So it would be a bigger disruption once crude gets and stays above 91. But right now, that is my upside price target on this rounding bottom. Here's that dollar bull flag on a daily. Here it is on the weekly, which is why I still see 103 coming into a theater near you. And the 10-year potential 4.8 would be alarming. And the 91 in this neck of the woods as a target for this slingshot bounce in crude, but then it would need to stay above in order to really shake the bears.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.